Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Let me go a step further. If you probably by now have heard or understand that the strongest time of the year for equities is the market generally bottoms in October and heads higher into on or about March or April time period. That's the strongest, best 6 months of the year. My friends over at Stock Traders Almanac, Jeff, who is the son, and Yale, the father who discovered the Stock Traders Almanac, have been preaching this for decades. And I can tell you this, in commodities, we definitely look at seasonalities. I've been taught that since 1980. Look at seasonalities. And I think it's important that if you're on the right side of the trend or if you're on the right seasonal aspect of the market, you may have a better chance of surviving the game. So first off, if you know in a yearly time period that in the summer it's best to be looking for the short side of the market, then you're not going to be looking at buying dips in the euro currency. But this is the Euro FX combination pit and electronic. I just wanted to bring this to your attention so that you can see. On or about June, it peaks. Down around middle of October, it bottoms. And then the yearly high generally takes place on or about the 1st of January. Now, with that said, let's move forward a bit. Let's take a look at our current chart right now. This is the spot euro currency that goes back since last looks like I've gotten this back since September of 2007. As you can see, the market rallies and on around March, and all of a sudden, here we come into this June and July time period, right in this area that we see a seasonal peak in the market, right in here. And so we know that probably going forward, the market should trade lower. Now, technically speaking, we also had a double top pattern in the market. So that was a big warning, and this was a major double top pattern that existed in the market. Now, if we just take away the simple information, you can also say, yeah, but we were in a wide range trading range. And that's, while that is true, you can also say one other factor may have helped you get short in this time period. Now, I've gone a little too far on the drawing, so I'm going to clear all my annotations. Here we go. This is the one time that we have at least the seasonally weakest period of time. So if it's a wonder of why anyone would not want to be short, I don't know. But the magnitude of this sell-off was certainly one that was approximately way overdue, because I think that up in this area, the market just got a little too ahead of itself. And in this box, or this zone that we want to call of resistance, it was ready to break down. Once it broke through its support or sideways channel support, it just didn't even give you a chance. But by knowing ahead of time that you had a seasonally weak period somewhere in June to July, and I'll go back and show that to you in a minute, I think that traders may have understood how to take advantage of that. Here's a trick. Or not a trick, but here's a situation. Traders may say, listen, the volatility's too much for me, or maybe I don't understand, I really just don't understand futures, or I really just don't want to open up a spot Forex account. Most traders do trade stocks. And here's a neat thing. If you are a stock trader, then you can look at the ISE product, and I'll show you that in just a minute. But by looking at seasonalities, you can also uncover a situation where you say, you know what? I want to maybe take advantage of a potential dollar rally or a euro currency move, and at least I can start pricing out options that if I know what the seasonality aspect of the market is, maybe I could look at an option that's going into maybe September or October and look for some significant deterioration. And that's an area that I think needs to be explored for either next year or perhaps maybe when we get into October, maybe look for the euro currency to rally against the U.S. dollar. But either or, notice that this old area of resistance that I'm drawing in here, notice that that is approximately where the market now has stalled. And if we take this area out of 148, then the next area that we want to probably look at is right down around 148. So what we would consider, or as a longer-term trader, I would consider this a value area. So in October, I don't know what we'll do between now and then. My guess is through this really long, hard decline or strong trend market condition, I would probably suspect between now and October we should see some type of consolidation or choppiness in the market. But if we get into this buy zone in here sometime in October, seasonally speaking, I'll be looking at probably going long the market, and I'll be looking for the right vehicle. So let's talk about the right vehicle. Now, here is the ISE Euro FX Index. Now, just like I showed you with the spot Forex, that's what you generally hear on the news, right? You hear, oh, the spot Forex is at 155, the Euro currency is at 152, the Euro currency fell out of bed, it's at 149. Well, with the ISE's product, folks, it's inversely correlated to the spot. So this index, but notice that it mirrors, or it's the inverse relationship. So if we had a double top in the spot Euro currency Forex, then we should have a double bottom, and we have a double bottom on the ISE Euro FX Index product, and we do. All right? So with that, we do have a different picture of a longer-term double bottom, and so what will we see? We'd see potential resistance right up here, up to the value area, and this is the zone, okay? It's just inverse relationship. So now, just to explain how this works, if you want to be looking at going into October, if you're thinking that, as I would, that the seasonality of the Euro currency bottoms in October, goes higher into December, then I want to probably, if we're in this area, right, then I probably want to look for a retracement back down into here, the 64.5, and so I would want to look at some vehicle or option strategy. There's a lot of things that you can do. And one thing I got to tell you, out of first-hand experience in the last month, because I caught some of this downdraft in the Euro currency, all right? And I got news for you. I want you to take a look at the ISE Euro FX Index, all right, number one. These are options. This is as of today, so I want you to know that I took a screenshot. This is from my personal trading account. And I want you to see that the last on the ISE FX Index was at 67.04. So let's look at an at-the-money put option right now. 67. Puts are on our right side of our the column, and calls are to our left. So buy to the left, sell to the right. That's the way the paper's always been written when I first got in the industry, and this is how it reads on a trading platform.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.